Welcome back to our summary videos. Let us discuss Ind AS 23 borrowing costs. As the name suggests, this Ind AS deals with accounting for borrowing costs. To begin with, let us understand the term qualifying assets. It is an asset that takes substantial period of time to get ready for its intended use or sell. Ind AS 23 requires us to capitalize only those borrowing costs that are directly attributable to the acquisition or construction or production of a qualifying asset. If funds are borrowed specifically to obtain a qualifying asset, then borrowing cost will be the actual borrowing cost incurred as reduced by any income earned from temporary investment of such specific borrowing. However, if the borrowing is for a general purpose, then entity should determine a capitalization rate and apply it to expenditure on asset. But when does an entity commence, suspend and cease capitalization of borrowing cost? Ind AS 23 states that entity should commence to capitalize borrowing cost when it incurs expenditure and borrowing costs and undertakes activities to prepare asset for its intended use or sell. So in short, three things are important. First, you should incur the expenditure. Now, of course, you will incur the expenditure only when you also have the borrowing cost. So first thing is you have the asset, you also incur the borrowing cost, and you also take the activities to prepare asset for its intended use or sell. Capitalization of such cost would be suspended if an asset suspends active development of qualifying assets for extended period. And as you may have guessed, when activities necessary to prepare asset for intended use or sale are completed, entity will cease to capitalize borrowing cost. But what if construction of an asset is completed in parts? What does capitalization rate mean? What are activities necessary to prepare an asset for intended use or sell? Does Ind AS 23 have any disclosure requirements? All these issues are discussed in our detailed videos on Ind AS 23. Stay tuned to indaslab.com. Till then, keep clicking, keep learning.